Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And of course, we hope there's lots of opportunities for you throughout the show. Our goal here is to raise your probability of success as a trader or an investor. And we do that through our own method of charting, which some people are going to be seeing now for the first time, and that's called cycle analysis. You're going to see what we do. It's essentially an art form where we look at the rhythms of the markets and then look for a representation of money flow. It's observational and it's always in flux. We're always working on our charts every single week. We do about 400 different symbols. So wanted to catch you up on what we do here at askSlim. For the stock market this week, it's been a choppy week, moving sideways and in a very modest, narrow sideways correction, and then on Friday turning back to the upside. The sentiment here is clear. It's buy the dip. There's so much buyers out there that there are just no way that the market could get any significant downside in there. That's even withstanding what we've seen is a downside move in oil this week. Energy stocks moving down somewhat, weighing on the market, and that really hasn't really mattered. Oil, which was down about 6% for the week, that was a pretty good sized drop. And that was not enough to really scare the market. There's talk out there of glut warnings and China dumping gasoline, but maybe the stocks aren't getting hit all that hard because the rig count is a little bit better. There was a little uptick in rigs, and when you get that, that's often an enticement to oil stock buyers because they think, well, the worst is over. So a pretty good downside move in oil this week and not really affecting the market. Gold moved to the downside about 1.5%, silver about 3%, and we expected these modest corrections to the downside. But again, the gold stocks are really strong, and what they're proving in here is that better prices bring much better earnings. Their earnings definitely improved, and that has buyers continually coming into the gold stocks. Also, we just think gold is basically in a rest period that may last some months in here, but then likely to move up again after that. So we'll talk about that later on in the show. When we look at our short-term view, we'll look, of course, at bonds also, and actually 5 major markets. The bond market, we'll call it slightly softer this week, and we thought it would come down and then look for a minor bounce. I think that bounce is starting, actually. I'll show you that chart also a little bit later in the show. And the dollar to a recovery high. A lot of that has to do with Japan as they are talking more stimulus. Though Kuroda came out and said, Kuroda is like their Mario Draghi, our Janet Yellen, come out and said they're not ever going to do helicopter money. So kind of in your face Ben Bernanke and Janet Yellen, who totally believe in that, of course. And we're going to actually blame Greenspan also, who kind of started that whole mentality there. So there's a lot of talk about stimulus there in Japan because, well, they got problems. Their debt to GDP, private and public, over 500%, worst in the world. And when we get to the tipping point in there, I think that's the country that's going to take everything down. And we get the purge that's supposed to happen in here because of the nonsense of the central banks. So the euro also moving to the downside. We talked about it breaking 110. Sure enough, it has done that. We said that last Friday. And so that's also helped the stronger dollar, which has helped weigh on gold and silver. Well, there was modest distraction this week from the Republican convention. We'll call that a rocky convention. Trump had a decent populist speech. He did a decent job at it. If anything, what really got highlighted was his fantastic children. You just have to be amazed at the quality, the ability to speak, and their knowledge. And I just thought so much of the kids. Of course, they're not the ones that are running for president, but I give them credit for that. There was an expected bump as the new polls came out. That might be affecting the market today, probably temporary. 15 points was the national poll that Hillary Clinton was in the lead by just a few weeks ago. And in the same poll today, it's down to 4%. I think that's giving the biotechs a boost. I think it's giving the HMOs a boost because Hillary Clinton wants to kill those companies. So that might be responsible partially for the up move we're seeing here on Friday. Monday starts the Democratic convention, and Clinton is sure to get a bump off of that. So we'll see how the dust all settles after those two conventions are then over and where we are. And I wouldn't be surprised to see the polls, the movement of the polls as we get closer to the election really affect the stock market. So if I'm mentioning anything here that's really politically based, it's really about the fact that I think volatility is going to go up starting in a few weeks. And that's really based on the fact that we're moving towards the election and the fact that the stock market's in a rally that probably down the road, not too far, is going to give us some significant correction. All right, so let's see what happened this week. We'll take a look at our 60-minute chart of the S&P 500, the ES, and here is that chart for you to see. On Monday, there were some small gains in there as we saw oil move to the downside, but it really didn't matter in there. Oil just not affecting things all that much. So we just had the markets, go down overnight over here, but then pretty much get strong in there throughout the day. Tuesday, the markets got weighed on a little bit by these Department of Justice talking about blocking deals from the HMOs and Netflix getting cratered. So that had the market kind of moving down during the day. But then again, it's just a strong close as nothing really was stopping this market from being able to hold itself together. Wednesday saw a weak commodity market, silver down 2%, gold down 1%, oil down 2%. Goldman Sachs talked about Russian oil production, and that was really weighing on it, but that didn't mean too much. And you could see in here you got this big spurt on the upside, all based on earnings reports that were really good in there on Wednesday. Thursday finally brought the correction. We were waiting for a downside move. This did not get anywhere down as far as we thought it would right in here on this move. The ECB came out. They said nothing. They were expecting possibly some talk about stimulus. Nothing happened in there. Kuroda came out and talked no helicopter money, so that pushed down. And the airline stocks, that's the day they had a break in here, and I'm going to talk about that in the worst of the week coming up. Friday, the dollar got strong and gold was weak, but buyers came back in stocks, and bonds started to move to the upside again. So now this is one of the first days that we're getting them moving together again. And the stock market, with just an hour to go as we're doing this show, is moving to the upside on the high of the day, with the S&Ps up a cool 10 points. So you can see choppy week, modest little corrections in there, and not all that much to really be concerned about when we see that in a market that is resilient, strong. Take a look here at our earnings and economic calendar right here, and we're in the midst of earnings season, and that's why we have all of these earnings coming out in here. As you can see, these boxes are filled up in here as we have quite a number of earnings coming out. And take a look here at Monday there's not much, but Tuesday before and after the close, a ton of them. We have Apple coming out after the close. On Tuesday, McDonald's is a big one on Tuesday morning, Caterpillar on Tuesday morning. So those are some decent ones in there. Wednesday before the opening, there's Boeing in there. That's a big one that could potentially move the Dow, of course. And then after the close, well, Las Vegas Sands is one we have a position in. So that's why I'm kind of noting that one in there. And this one, you can see a decent amount of earnings reports. Thursday is probably the busiest day of the week as far as earnings reports goes. We start to get some of the oil stocks. Here's COP, which we happen to be positive on, believing it's in an upward move and that oil is going to be improving. So that one coming. And then, of course, after the close on Thursday, a market mover is Google. So you can see that. And lots of earnings coming out. If there is anything during the week that could move the market as far as the economic events, it is this one right over here, the FOMC announcement after their meeting this week. They meet Tuesday and Wednesday for a 2-day meeting, and then we see what happens. Normally a big mover after the close. So that's a look at our earnings and economic calendar. That is the opening segment for this week, and we're going to be right back with the best and worst for the week. Best of the week. It was all earnings this week. Well, there's one buyout I'm going to show you. Some big movers, and truth is, these patterns basically look to me like they're all still buy the dip, all pretty decent patterns that we're looking at in here on these charts. Of course, we're looking at weekly patterns mainly, but I'm going to show you some daily ones in here too. So again, cycle analysis is what we're looking at. Here is Joy. A look at this one. This one was in a recording that we did on May 30th, talking about our bullish stocks for the bullish period we thought was coming. There was a little moment of panic in that bullish period, of course, with the Brexit. But you can see in here, Komatsu buys Joy, $2.9 billion deal. So the stock is going to come out of our list of 325 of our favorite stocks. And you can see big gains in here of 22%. Nice gain, and in what we call a rising phase, you can see that. And no way to know, of course, that it's going to get bought out, but a great looking pattern that is now done. Next one we're going to look at is Chesapeake, CHK. Interesting, this one we talked about in a video last week, where we talked about favorable patterns in the energies. Of course, oil has been quite weak, but there's some of these stocks that are looking pretty decent. Here you could see in this Chesapeake chart, take a little closer look in here, that it's had a very nice rally this week. When you see these blue lines right over here, that's the timing that we were looking for this cycle corrective phase to end. And you can see it came maybe a week early, but moving strongly to the upside. 17% gain on a Tudor upgrade on that stock. So take a look at our video, if you remember and haven't seen that yet, in our stock sectors segment from a week ago. Next one is eBay, EBAY, 16% gain. We didn't know this one was coming. We do see that there was a basing cycle, and that is essentially when you get a rally and it comes down and looks kind of like this. You can see that right there, but it doesn't make a new low. Then when that happens, you would expect it to take out the high. But there's no way that we knew that it was going to gain 16% on the week on very strong earnings after that solid base in there. Marvell is the next one we're going to look at, MRVL. Or is that Marvel? It's 14% up. It was a Marvel this week. Earnings were good. Analysts were bullish. And we call this an early cycle bottom. You can see we looked for the low to come right in about here. It came early by 3 weeks. And again, a bullish cycle and turns upward. This is one of those stocks that when it pulls back, it's a high probability buy. So we're liking that one. Nice bullish pattern in there. Next one in the cloud category is VMware, VMW. And you can see in here another early bottom based on the cycle analysis that we were looking at right here. and you can see the low due here, and right in between those blue spikes, it pops or explodes to the upside. This one, good earnings, good guidance, and moves strongly to the upside. GME is the next one we're going to look at. That's GameStop. And you can see this one, same kind of a good looking base. Engulfing pattern makes the bottom, and then it turns up in here on strong earnings also. So lots of great earnings and lots of great patterns. And you know, all of these look to me like they're early in the upside move. That means you buy them when they pull back because they'll still be positive. Talk about positive, take a look at Qualcomm. I'm telling you, analysts all over this one in here. Let's hide that. And you can see what's happened in here. We had this bullish pattern right in here. We had these extension numbers up there, which are chart subscribers received. Those are kind of targets after this bullish pattern, and then this upside move right in there. So looking pretty positive when we saw that, and it looks like it's got some more upside in there. BIIB, well, this is in the category of stocks, the Biogens, like this, or the other in the biotechs that might be getting a little bit of a boost out of the polls improving for Trump. And you can see in here, look at how it followed that cycle pattern. Note this red dotted line right there. That's that last cycle peak. And if it gets through there, it's going to turn this whole thing positive. Why is that? Well, see, this is a negative cycle right in here. When that happens, the odds are only about 1 in 4 that it gets above that kind of resistance. But even getting close to it says it's very strong. So what that would mean was that this whole downward, the momentum or the downward energy that is in there is then over with. So you would get a breakthrough in here, some kind of a corrective period out here, and then another rally there. So that is a nice looking and shocking bit of strength that we're seeing in Biogen, as their earnings were great, outlook up, and their CEO is leaving. We talked about the HMOs, and that's another group that has been all over the place this week. We have Humana up 10%, Cigna up about 8%. What happened during the week is the Department of Justice said that they were going to get in the way of all the big mergers. Big break in there. We threaded the needle on an Aetna trade, essentially. And then they said that they're going to fight this with the Department of Justice. So then a lot of bids came in the HMOs after that. And then again, it could be the polls as the race is tightening up based on the national polls. And as we've said, Clinton is out to kill these groups because she wants lower medical prices. And I'll keep my political comments down at the moment. So that is looking at the best of the week, and we'll be right back with the worst of the week. Before we go to the worst of the week, there's 2 more stocks that I want to mention to you. This week we did a video on the Asian markets, talked about how the China market, the Japanese market, the Korean market all look like they were positioned to have upside moves. We showed those country ETFs and some real good information. 2 stocks that we listed in there that we thought that were really good, that would continue on the upside, I want to show you right now. One is a Chinese stock. Always want to give you things that I think are going to help you to raise your odds of success. So not only when we talk about the best of the week for what happened, but also what might happen. Take a look here at Alibaba, and you can see in here this Chinese stock, based on our analysis, is all set up for some upside moves. Nice base right in here, completed and moving up. We think there's a significant more amount of rally potential in there on the upside. And another stock will show you a Japanese stock. KYO, Kyocera, another technology stock. Take a look in here. You can see that same kind of a basing pattern in here. Note this upside gap right over here that made the low right on time. You can see that right there. This looks like a great buying opportunity to us. So that's KYO, Kyocera. in the area of Japanese technology. So that would be maybe the best of the opportunities in this week. And now we're coming up with the worst. For the worst of the week, no contest here on a big declining stock. Talk about flaming out. I remember it was about, well, 30 something years ago when LA Gear did the same thing. You know, these, for some reason, shoe companies can be like flash in the pans. All of a sudden, they go from really hot to really not. And you can see that here in Skechers. Skechers down 22% on the week. And their earnings were bad, their guidance was poor. You could see this big flag that formed in here. I mean, that is really a big one. Based on what is not easy cycles for us to read, this looks to us like it could have another month or so on the downside. Man, big downside flagpole, the big long flag, and then simply turns down on this bad news. Take a look at the daily chart and you could see the massive amount of selling that's going on in here. Look at that volume comparatively. I mean, it's just huge. Big downside gap in there, and the stock, well, it might try to rally back, but we believe it will not hold any rallies at all. So that is a look at a really bad one, and that is Skechers. Now, we had a lot of airlines in here move to the downside. Southwest Airlines came out with the earnings okay, but they warned about a revenue slowdown coming. Man, you got to really think about this. It wasn't too long ago, a couple weeks ago, I did a video on Dow theory and talking about how far behind the transportation average was. You got to really wonder whether or not these breaks, this real weakness that we've seen here in the airlines, is significant in that regard. And maybe there are pockets of the economy that are so weak that says that the stock market rally will not have a lot of legs. That could mean it still rallies for a month or two, but let's just call this maybe knocking one of the legs out of a four-legged stool. So let's take a look here at this pattern when we look at LUV. I mean, really a bad one in here. And take a look at what we call almost a cyclical breakdown. We have a drawn in as if it is. Look at this LUV, 14% down on the week. And let's take this closer look, and you can see we have this. It's going to have to break under here to be an official breakdown, and when it does it, it's going to have all this time to decline all the way out into October. This big break is a bad thing. Look at the evening star right over here, and then it looked like it was trying to do better. It made the bottom here as expected. You could see in the rally. This is a bad sign and really speaks to some issues here in this category. Look at this island top right over here. Gap up, a gap down from there. High volume, and this is really speaking to issues that we see in here. So this really got to be concerned. Take a look at JetBlue, JBLU. We'll stay in the daily chart here for a second. And you can see the same kind of a pattern in here. Note the resistance at the 89-day moving average. Incredible. Failed here with an evening star, failed right over here with an engulfing pattern, and then failed right over here with an island right on the 89-day moving average. Tell me that isn't significant. Somebody tell me that. All right, let's take a look. Let's just talk about some of these other airlines in here. We had SAVE, Spirit Airlines, down about 9% also. The other majors, Delta, American, United, down also, not as much, but really got to say there's a caution flag going out here when you look at that. Also on the downside, a couple other stocks are worth mentioning, a few actually. Take a look here at Netflix, NFLX. This one As soon as I read about the fact that they were raising their prices again, it really reminded me of the debacle that happened when they did that some years ago. We actually had this stock as negative in a resistance zone. You can see a big dotted red arrow there that had us in a long-term negative pattern. We've had this there for months, talking about it failing in this resistance zone, and you can see it's got another, let's say, 2 to 5 weeks on the downside in here. Targets that we have are right around under 80 and then about 70 right over here on those extension numbers. This is, really troubling when you look at that kind of a pattern. And when you're in a period of a major bottom looking like it's forming, where you have these multiple patterns pushing down, that's right in here into August, that's when there is the greatest risk. So that's why we think that there's still some time here to move on the downside in Netflix. Earnings beat, but their subscriber growth really disappointed, and they have to really be looking at costs going up to be competitive in this world of a lot of other streaming sites. And Amazon just absolutely nailing them at the end of the year with all of their deals on Amazon Prime. That's a big issue for them. So that's a look at Netflix. Steels were weaker. Take a look at Nucor, NUE. It's about time. I mean, these things have been so strong in here. And you can see big green zone in here, but rolling over. This was down about 6% on the week. And take a look here at the daily chart. A lot of islands, and take a look at that island reversal in there. That's a bad look at a bad chart in there. Steel Dynamics down 6%. U.S. Steel holding on, only down 2%, and probably looking like there is more to come in there. We would be a seller of U.S. Steel. Intel, a big disappointment in here as their costs go up. Look at this daily chart. Now you can see the nice cycles on the daily chart. See the rally in here, the sell-off in here, the rally in here, and the top with what we call a bear kicker pattern right there. As it gets close to the support, we're going to look for some more break in there on Intel, as that one is not looking great. Take a look here at the weekly pattern, and you can see we have this as topped, and topped early. It's only about 4 weeks off of that key bottom in that support zone right there. And we would say that for this rally's over in Intel, and we would be a seller in there. If you've noticed, the agricultures have been really weak. I mean, the grains getting killed. We talk about that in our Future Speak every single Wednesday. Caught a beautiful downside trade in there in soybeans. Of course, when that happens, it's bad news for Deere, because then the farmers don't have money to spend on tractors when the prices go down, or they're a lot more reluctant. So we're going to take a look here at Deere stock, down 4% on the week. And this stock has moved into what we call the yellow zone, which is a cautionary area. When we color the cyclical patterns like this, it gives us an idea of corrective periods versus bearish periods. Note this one in here where the low came and it rallied and then broke down under that level. It was red for this entire period, and you could see what that brought. This one managed to hold above that low, so it only stayed yellow. We still think that there is a lot of time to fall in here. We believe Deere is a negative stock, and we would be selling this one in any opportunity on the upside. So we call Deere, with only a 4% decline this week, one of the worst of the week. That is it for this segment. And we will be back shortly and take a peek at the question that you might have about what exactly is askSlim. Short little video coming here. All right, short-term view, we're going to look at basically the next 4 to 7 days in the 5 different markets. Always taking accountability of how we did in the last week. 2 weeks ago, an astounding 90%, we really nailed it. We didn't do quite that good this week, but we still had a good week. We're going to give us a cool 70%. Maybe that's a hot 70%, as we really got a lot of the markets right. Gold, we were spot on. The euro currency did exactly what we thought. So same thing for the bond market. Light crude broke a little further down than we had anticipated. We thought it would go down for most of the week, and we were hoping that it didn't break some significant lows and set up a buy. Actually, it went down enough for us to a zone where I think it is actually going to turn upward. We're going to show you that. We only get half credit for that one. The stock market, we got some emails, people saying, nice call for the week. We were looking for shallow week, modest corrections, and then turning up. But we didn't even get down anywhere near the corrective level that we thought we were going to get to. So we're not even going to give ourselves any credit for that. So thanks to you, thanks to all those that sent us emails about the stock market and all the emails that you all send us. So take a look at here. We're going to start out in light crude, and we'll talk about what we said last week and then what we think is going to be coming in the next week. So here is the daily chart in light crude. Note we have added in there a dotted line. That is another cycle that had made itself apparent to us, and we really like the fact that this one right over here, which we've expanded out a little bit because it fit better. We do that. I mean, this, like I said, is an art form, so we want to always take the newest information and use that information. And it looks to us like right in here is a nesting of 3 different cycles. Now, note the beautiful short cycle that's right in here. You can see that, and it's a nice look at the short-term cyclicality that can give you information about the longer term. So you made a lower low here on day 9. You made a lower low here on day 9. You made a lower low here on day 7. So you can see this downward stair-step motion in here. So we can't be, even though we think it's going to go up from this level, we can't be overwhelmingly excited. We do think that the test of the minor resistance right over here is a very high probability. We're going to call this an up week, testing 45.65 to 46.10, that minor resistance area. It could go through there. If it gets up here to 47.40, you'll know it's in much better shape. Right now, because of these lower lows, we're only going to look for that bounce up to that level, and then we're going to read it again after that and see what we think is going to happen. So there you could see our weekly chart right over here, and that corrective process. Gave you a little peek in case you're not a member and don't get to see that very often. So that is light crude for the weekly on the left and the daily on the right. Switch this over now to the gold market /GC on this daily chart. And here you can see, note this nested low periods in here. So before I bring it in, I want you to see, because of these nested lows, and note the dotted red line in there, we've tightened that up a little bit. That is the GDX as we expect it now to bottom with gold. The pattern in here was suggestive of testing that support level, that short-term support level, in this nested period here, and then move up after that. So we believe gold is in a period where it's about to get an upside move. Now, we've talked about the fact that we thought it was going to get down to about 1315. We talked about 1310 to 1370 as the range we thought it would be in. Well, 1310 was the low this week. And then you get this engulfing pattern right over here. It's pulling back on Friday. We actually think this is an area where where gold should be bought, and we're going to call an up week in here, similar to what we just said in light crude. We don't think there's any huge upside move coming in here, but we do think it's likely to test minor resistance right there. 1346 to 1354 is that zone, and we're going to look for an upside move into that area right over there. Next thing we're going to look at is /6E. Last week we said shop around and then head down. We thought it would break under the 110 area. and you can see that has now happened. This short-term resistance area, we thought that was the sell area. It got up in there, and it's really paid off a couple of times. We thought it would break underneath this low right over there, under the 110 area. It gets down as low as 109.85, so it did exactly as we expected. Patterns just working beautifully, and you can see in here, timing-wise, this looks like another week. We could see it going another week on the downside in here, maybe even testing 109. But we're not calling for giant declines in here, just easing down still. And then we'll call it maybe only a small down on the week, because end of the week we're looking for an upturn or the beginning of next week. Excuse me. It's not easy to tell in here when you get to this spot whether or not it's going to carry all 5 days down. So it could be 5 or 6 days down still and then turning up. So we're not sure if it's going to turn up at the end of this week or the beginning of next week. So that would be the call of just modest down, and then moving after that, trying to move to the upside the following week. So like we say, it's like a 7-day look, and that would be like a 7-day look, something like that. So that is it. Still looking for downside, and did exactly as we thought last week. Take a look at the bond market. We thought that we would get a move down to 131.13 in the ZN, and 131.13 didn't quite get hit. It followed the pattern exactly. 131.18 is where it got down to, and then we thought it would turn up, and if it had a chance to turn up, we thought it would be late in the week. So I would call that a bullseye. You see that right there? And then we thought that it would rally again. So this looks a lot like the same patterns we just talked about in light crude and in gold, where we expect these minor bounces up to minor resistance areas. You can see in here the cycle patterns that are turning up in here. The dotted line you can see right there, that is the bond market. This line right here is the 10-year, pretty much in line, as you can see. So we're going to look for a move up here to around 132.30 to 133.06 into that minor resistance zone, and we actually think that is going to be a sell area. As a matter of fact, for our rankings and setups, level 3 members, when it gets up somewhere into this level and we start to get a signal, is when we're going to be sending out short side setups in there. So this looks to us like a bounce, but a good short side trade setting up. So that is a look at the first 4. Let's talk about the stock market. As we said, an incredible amount of resilience in here. The buying just doesn't want to stop. We had expected that we would get a move in here that would take the S&P 500 down to a low of, what was my target last week? Oh, 21.28. Well, the low of the week in the correction, which came yesterday, was 21.59. So we didn't even get close. And this pattern in here is extraordinarily positive. Maybe there's a window in here that I'm missing, that it might take a hit on the downside for a day or two. But for people that saw our futures review on Wednesday, I talked about the pattern in here of 15-day rallies and then a couple-day decline. That's right here, 15 days up, a couple-day decline, 15 days up, a couple-day decline, and then moving up again. So actually what we have right over here is 15 days up. You can see that 15 right there, and barely a decline. So maybe it pulls back another day. What we look for is, minor downside risk. And then this area right over here, we'll call it 2180 to 2188, in that area right there. We think that that's, it's not far away. We think it's going there right now, and that is likely going to be the area that it stalls. Now, these areas are important. I mean, if it gets through there, it could accelerate and be in a buying panic. We're in an upside move here. You can see right in here, I said this area right in here tells the story, and this rally period right here, and it could accelerate through, or it could fail at that level and give us a negative setup. What would a negative setup look like? It would be fooling around over here, getting a rally here, and then breaking this level. That's what a negative setup would look like. Right now, I have no reason to call that, but we'll see how this sets up and how these patterns speak to us, and that's what we're always doing, is listening to the messages of the market. Last week for the VIX, we said we thought it would go down another 2 weeks, or it would be another 2 weeks before it could get a significant rally. Here's that chart in here that we were looking at. You can see the cyclicality in here. And this, I said that any uptick in the VIX is likely to fail. You can see that going on right here. This right over here is about, we'll call it 8 trading sessions right there. So somewhere like 7 to 10 trading sessions. And that's speaking to the fact that the stock market is going to be in that rally period, and we have to see how that acts. After that, as I said in the beginning of the show, I think we're going to get into a period of higher volatility as we get closer to this election, and we could see a lot of bigger moves. And maybe that area of 2188 does hold the market on the upside. Man, I hope you have loved the information we shared today with you. Again, always wanting to raise your probability of success. We've been at this for 42 years now in the market. I've been studying market cycles since I read the book on market cycles, Profit Magic of Stock Transaction Timing by J.M. Hurst 40 years ago. So can't believe what happened to all that time. It's what's happened is looking at millions of charts. So that's it. That's it for this week. We hope you have a very safe weekend. It is a crazy world out there, and we are always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.